Hey everyone, Mark here at Tesla. $256.49 was Tesla's close today, meaning that it closed green. $11.48 in a share price increase from Friday, and in percentage terms, 4.69%. So when you look at Friday and Tuesday's trading days and kind of average it out, there was a good recovery today, but it wasn't a full recovery. So maybe Friday was a little bit of an overreaction, and today is maybe what the real price should have been, essentially a slight drop due to price cuts for a very small portion of Tesla's product line. I think S and X only makes up about 4% of the sales when you're talking about it like on a car for car basis, where Model 3 and Model Y make up the vast majority of those sales. And maybe they're also factoring in the fact that there's going to be maybe a little bit of margin expansion depending on how much cost of goods was taken out of the manufacturing of the new Model 3. It is slightly more expensive, very slightly, compared to the previous Model 3. So we have a little bit of expansion on that front. And understandably, there is kind of that X factor. We don't know when the Model 3 is going to be produced and sold within the United States of America. So there's right to be not a full recovery date because we don't really know if we're going to see expansion margin in the short term. Just because we have a new model. In reality, we can actually have maybe even just revenue slight contraction because of the price cuts combined with maybe we're not producing as many of these Model 3s as of yet. Maybe during the transition in China that I think we saw some record Model Y production from news that came out over the weekend. But that could be just because, the resources were focused on making Model Ys. They didn't want to make any previous like non-Highland Model 3s. We're not really sure how that's working out, but we do know a couple things. And let's go over to the browser and talk about the news real quick on the macroeconomic and Tesla front, and before we dive into the charts. So first things first, there was some nice action in the pre-market from a couple statements made by Waller from the Fed. He said, specifically, these are the things that really got the market going, but ultimately, of course, we saw the market sell off over the course of the day. During his Q&A, he said recent data gives the Fed space a little bit more room before making a next rate hike decision. He also says that the job market is starting to soften, kind of recognizing the unemployment rate going up. He says it's not surprising that the unemployment rate has ticked up because obviously in the past, whenever you raise rates, eventually the job market will take a hit. But he kind of countered that a little bit, saying that data will drive whether the Fed will lift rates again. So he's not saying that that there's no more rates for the rest of the year, but I would say this is a basic confirmation that there is no rate hike this month, and the market has been pricing that in for a while. But it is also, as the next week comes on and goes on, and we get some data back and try to figure out if inflation is really cooling down, if the job market is really cooling down, we might get more clarity on if we're getting a November hike. And if we can eliminate the November hike, it'll be really good for equities going into October, or maybe towards the end of October. I just want to reiterate again, the market is generally, from a seasonality perspective, very, very weak when it goes through September's trading. I know we had a very weak August, so there is this kind of conversation going on with the likes of your Tom Lees from Fundstrat, that due to the weakness that you saw in August, where it isn't usually that weak, maybe the weakness of September is not going to be, might actually have some strength depending on the type of data that we get. So maybe it was just kind of moved over 1 month earlier, and the lows of September that we usually see were in the last 2 weeks of August. So there's the possibility that there's that there's some bullishness depending on the type of data that will keep us from seeing typical September lows. So I like just to keep that for you guys to keep that in mind, because you're probably going to be inundated with a lot of charts of September action or like historical September returns that show that 60% of the time that September is weaker than it is stronger. And we'll see how that works out. Tomorrow's going to be a big deal because some of the market weakness that we saw today, excuse me again, Some of the market's weakness that we saw today was really not related to the American economy per se. I understand that yields have gone up a lot. I understand that the dollar is going up a lot, but these are really a lot of factors that are international in origin. Specifically, the PMIs and ISMs of the Asian countries, I would say mostly China, and all of Europe, basically, just being very, very weak in all aspects and getting closer to contraction from the services perspective. So we have tomorrow, we have our services and we have our PMI numbers. So we really want to keep an eye out for that. The great thing about it is, that those numbers will come out during cash hours. So, you have the ability to hedge just even a couple minutes right after the market opens if you need to, instead of, doing it now and trying to hedge overnight. Of course, if you have access to futures trading, you might be able to take advantage of moves that happen from maybe the open of China today and the open of Europe tomorrow. But just keep in mind at 9:45 and 10 a.m., you're going to have PMI and ISM services drop respectively. Now, let's talking about the PMI for China. We already know that everything that's going on in China, it's just really not that great. So from the services aspect, it missed by a good margin. We were expecting around 53 for the Chinese services sector. It actually came at 51.8, getting closer to contraction. So as the article says, any reading over 50 indicates expansion. So even though it is over 50, but it just like kind of barely over 50, and it is a decline, month over month. It's the lowest reading of the year. So we're getting to the point where we know that the PMI is basically in almost a contraction phase. Now their services is almost in the contraction phase, where in that type of for us, if we were to have a slight contraction in services, it actually might be a good thing. And we'll look at an article on Yahoo about that. But for an economy that's really, really suffering, whose rates are already being cut, whose rates are much lower, like half of ours right now, that when their services sector is contracting, that doesn't really give them the ability to have that, income to take advantage of lower rates, to expand their economy and to basically, fuel an economic recovery that has been a year in the making from the headlines. Everyone's been talking about the great Chinese recovery that we saw potential in January of this year. But, obviously we're back in a bear market for a lot of tickers in the Chinese stock market. So for us, though, when we look at our ISM services number tomorrow, maybe we don't want to see a beat on expectations. And looking at this article from Yahoo, it's basically highlighting when services is beating manufacturing, when ISM is beating PMI, let's say, you see a stronger dollar. So what they're saying here in this article, we can take a look at it. So when services have outperformed the goods sector by a 2.5 margin over the last 6 months, 4 times over the past 10 years, each of those times, the dollar has gained an average of 4%. Now, we know trading in all of 2022. So if you're trading in 2022 like I was, one thing. You can just you don't need to watch any other indicator, right? You can simply just, plop up DXY into TradingView. And when DXY is going up, you can confidently say all the equities will be going down. And you probably listened to some earnings reports, earnings calls. I'm sorry, and you're on the call, and the CFO gets on. And it's talking about this headwind that comes from currency, and how they're maybe in a constant currency basis, that the currency was how it always has been over the last couple of years on average, that maybe they would have more revenue, but due to the headwinds of currency, meaning the dollar being too strong and them selling services or goods in some international market, it becomes a problem for profitability, where you're selling a good or selling a service in another country, and then you have to convert the country's currency back into dollars. You're losing money essentially, Because if the dollar is strong and their currency is weak, you're just not getting a great return. So if we show a stronger ISM number and the dollar keeps going up, and the dollar has been gaining for 8 weeks now. So we don't want to get ourselves in a situation where, 1 quarter from now, let's say Q4, you're sitting here on the Tesla earnings call and their new CFO is telling you, due to the dollar strength, revenue has taken a hit by like 1 or 2 basis points. I'm like, no one wants that. But that's the reality. Because if our service sector is expanding and the people that are working are we already have an issue when it comes to what people fear is people being paid too much, really. I mean, that's what it really is, right? There's a portion of inflation that's tied to wages, where in a tight labor market, you are having to pay people more for the same work. But in reality, we also know that productivity hasn't been all that great. So, when we get productivity numbers this week, we match that up with ISM numbers tomorrow. We look at PMI tomorrow. Can ISM and PMI get more back in a healthy balance? You could see some movement up in the market, meaning that, okay, let's keep services under control. Let's not let that get out of control in the sense of it expanding. Maybe manufacturing can tick up a little bit. Maybe productivity ticks up a little bit. And then we can kind of wait and just hold and embrace until we have CPI coming in next Wednesday. So I really want to see, I'm really curious to see how the ISM number comes out tomorrow. So let's inverse the rest of the world. So everyone else is, not inverse the rest of the world. Let's kind of be in line with the rest of the world, where our services sector, it comes down just like the other countries. But in our situation, our economic situation, that it might help fuel a slight move up in the markets. Otherwise, if ISM is out of control tomorrow and we sell off, we could be selling off until like Wednesday of next week. And if inflation comes in bad, then we'll start seeing those typical September lows. And in the seasonality actually would time up very well, where the middle of the month, you will be seeing the low of the months. And ideally, that's not what we want to see, right? We want to see inflation come in. We want to see the labor market get controlled. Let's look at some Tesla-related news, though. And that Tesla-related news is going to be some information about deliveries. And the Chinese delivery numbers came out, and they were okay. These aren't deliveries. These are insurance registrations. So they came in at just slightly under 12,000. And to have a record quarter for China, we would actually need to see 14,000 a week until the end of this quarter. So if we can get 14,000 insurance registrations for Teslas in China by the end of this quarter, then you'll see a beat over last quarter, and that'll be a record quarter. So we can understand that this might be a fact that there's 2 factors, of course. The Chinese economy isn't that great. So is this a demand issue for Chinese economy? Or is it the fact that there wasn't Model 3s to be really purchased and people were waiting to purchase Model 3s until the new Model 3 came out? That could be it. Maybe that's even more it. Because unlike in America, China, like I mentioned earlier, is cutting rates. So their interest rates are going down on purchases of homes and purchases of cars as well. And I think I mentioned like a week or 2 ago, what I wanted to see from the type of stimulus that China does is that I want to see, people be able to refinance their homes. I want to see incentives for people to get into homes now. And I think a lot of these are being addressed, where first-time purchasers have a benefit, where you have maybe a slight opportunity to revise the type of loan terms that you have on existing properties. I understand, though, that doesn't necessarily reflect on the fact that a lot of properties have lost a lot of value, but this is kind of like the first little bits of help that just a regular person in China is getting. And I said, when it comes to stimulus, China needs to get away from propping up its institutions and really get money or cheap money into the hands of the people that have been suffering a long time because of, a lot of the type of policies that China has put in, especially when it comes to type of lockdowns they're instituting with COVID and what have you. So let's watch the Chinese numbers. Hopefully we can get a nice beat, but it kind of would make sense if we don't, just because of that transition to the Model 3 Highland. But we did see, like I said, earlier in this video, some record production on the Model Y numbers. So Troy has a little bit of information from the other side of the pond in Europe, where European sales are basically already exceeding the sales from last year. And that means that we have 4 months about to beat last year's numbers, which is fantastic. So we're seeing a lot of great information about individual countries beating year over year, month over month numbers in Tesla sales. That's really great for Europe. Also, mainland Europe is going to be receiving the Model 3s before, ourselves and before the UK. But at least the mainland European market has access to the Model 3s, and there won't be that type of like Osborne effect that we might get when we start looking at the transition to the new Model 3. So really good news coming out of Europe. But that kind of begs the question, when you can kind of understand maybe why we don't have access to the Model 3 here in America. We don't have the clarity of when even deliveries or manufacturing will start in Fremont for the Model 3. But we do know one thing is that there is still inventory for the the older Model 3 in America. And what are we going to do with that? Like, the whole world knows that a new Model 3 is out. And it's bound to come to America soon. There's articles that say that those cars, the Model 3s, will be delivered or be able to be ordered Q1 2024. What's going to happen with these Model 3s? It's something that you really have to, keep in mind that, it's great we had a great day today, but it's really just kind of it's just balancing out what happened on Friday. What we really want to be concerned about is, what is it going to take to get rid of all the inventory in Model 3s? And I know it's harder to get Model 3 inventory numbers now, or just inventory numbers in general, but you can still order inventory Model 3s. They're out there. And if you just saw a newspaper article saying, oh, here's the new Model 3 at the Munich, like auto convention, or Tesla in China is showcasing their new car at the Beijing Auto Show. Like, in the back of your mind, it's like, why would I wait? Why can't I just wait? Like, they're saying that the new Model 3 would be very similarly priced to the old Model 3. Why would I buy the old one when I can wait for the new one and get all the new tech, get all the new goodies? So, something to think about. And speaking of that, the Model 3s in Europe have arrived, and Sawyer retweeted some pictures that Esther Kokelman on X as well had shown trailers full of the new Model 3s. So really, really cool how they got to the continent so fast, or they're being manufactured there. But anyways, so they're not going to have a real Osborne effect over in Europe, which is really, really good. And let's go back to the charts for Tesla. So we kind of talked about it last week, that we could kind of see this head and shoulders pattern play out, and it's pretty close to where we just roughly drew what the price action could look like. We could, sell off to finish the shoulder off tomorrow, depending on how the ISM and PMI numbers come out, and where we can kind of just trade flat through the shoulder and get to the end of the week by the 8th. And when it comes into Wednesday, start de-risking for CPI and kind of get ourselves back to the lower EM. So there was an estimated move. It was around 4.3% for the week, and I adjusted the EM numbers. So I actually kind of moved them a little to more what I would think are more important levels. And those levels are always kind of around those $5 to $2.50 increments based off strikes on options. So I have mine at around like 235 and 255, just to be rounded at the $5 increments. And they're actually working pretty well. We've had this actually happen to us earlier. It was last week where we broke through the EM really, really early on in the week, and we sold back into it before the week closed. And so, of course, we have a shorter week this week, but there's a possibility, just based off the numbers tomorrow, that could we fall back into the estimated move area? Yeah, definitely. And what could that look like? I mean, even just get to below the EM, if things go really bad, it's about an 8% move. And But obviously, I want the stock to go up tomorrow. I just want you guys to be aware that maybe it's kind of following the idea that, okay, we have that little bounce. We're outside of the estimated move. Maybe we come back into it somehow, some way. Maybe we trade flat through it. Something to keep in mind. Before we look at some other charts, let's look at some catalysts. And I know a lot of people have their own catalysts, but I just want you guys to be aware of the things that I'm thinking of when it comes to very short-term, near-term catalysts. From positive catalysts, PMI, ISM. ISM kind of missing, PMI coming back a little bit stronger. CPI next week. We want to see some type of core CPI inflation come in. There is questions due to the costs of energy lately. Maybe the headline of the CPI will go up a little bit. We know that there were issues when it comes to food inflation from the Ukrainian grain deal and things like that happened over the summer that could be affecting what headline inflation could look like. But this is stuff that the market's already kind of calculating. But from how a newspaper or magazine headline type of thing, they care about headline inflation a lot. Obviously, that's why it's called that. Because if we see another uptick in this type of headline inflation, that how the rest of the world perceives inflation would be definitely influenced by that more volatile number, which includes energy and food. The markets might see it a different way, where if core is coming in, which is all that really matters, if core comes in, that's going to be a great boon for stocks. We all know a headline could go up. No one's going to be surprised if the headline's up. But core coming in, meaning if we can get the labor market under control, if we can get housing and shelter and rent under control, that's going to be a huge positive near-term catalyst for stocks. And when I mean near-term, I mean like within a month or so, basically to the end of October. So then another near-term catalyst we have, there's a little bit of an issue when it comes to the whole X kind of debacle, because I think with this weekend's stuff about the ADL, right? Elon was tweeting about the ADL, saying he might have to file a lawsuit due to the fact that the ADL is on some type of mission to have all the Twitter advertisers stop advertising on Twitter. And he says that Twitter has lost about 60% of those advertisers over the past year. When it's come to advertising on Twitter, you're probably also seeing the fact that there are some advertisers that you saw maybe just a couple of weeks ago, big advertisers that are not advertising as much. Like, I'm personally not seeing some really, really big, Fortune 500 company names advertising on Twitter anymore. I'm seeing really small companies advertising instead, or some really sketchy ads instead of your typical Amazon or McDonald's type of stuff that I was seeing very consistently just maybe a couple weeks ago. The ADL is basically soliciting all these companies to stop advertising on Twitter. Lack of Twitter profitability would mean what? That, okay, maybe Elon has to sell shares, and I don't mean that this can really happen, but putting Twitter in a state where it's losing millions and millions of dollars a day, how are you going to keep paying for that unless you get some liquidity somewhere, somehow? So if we can see profitability come back, meaning if these advertisers will come back, that's going to be great for Tesla, because it kind of gets that cloud, that Twitter cloud over Tesla's share price away. And can there really be a resolution to that near term? I really hope so. But if there is a lawsuit, that could drag on for months or years, really. So the Model 3 Highland release date in the USA could be a really big boon for the stock, but also be a problematic thing. We talked about that earlier. Cybertruck pricing and handover event. There are some rumors that we're going to see. There's kind of two camps, right? Where one camp is we're going to have a handover event, delivery event, pricing by the last week of September. Where the other camp is we're going to see that in October before quarter end. So he can simply say, okay, I did it before the quarter end. I promise you a handover event before the end of Q3. This is the last day of Q3. This is the handover event. And so that will put you in the middle of October. So those are the two camps. But having that information out, if the pricing for the first Cybertruck comes out, and okay, I don't want to say it like that. I was going to say that if it's under 80,000, that's going to be great for the stock. I would say, if there's only going to be, a couple hundred Cybertrucks available in the next couple months, I don't think you need those couple hundred Cybertrucks to qualify for the IRA. You can have some tri-motor Cybertruck being able to be purchased for those low number reservations, and they'll pay like 90 grand. But as long as the dual motor or like the single motor is affordable and under the IRA threshold for pickups and SUVs, meaning like under 80,000, I think that's going to be great for the stock. That's going to be really great for stock. And if they can get it even lower and beat out the Rivians and the OEM, legacy OEM pickup trucks as well, like the Silverado and the F-150 Lightning EV, if we can get pricing even under them, just because, the efficiencies this whole new like model has enacted when it comes to like, cutting costs of goods and making production simpler and all what have you, or not having paint like that. Well, it has a little bit of paint, but, not painting everything on the car. If you can get this car very affordable, it's going to be a great boom for the stock. Q3 margins, if Q3 margins come in at the end of October and they're looking really good, boom for the stock. Same thing for production deliveries. If that puts us on pace to for 1.85 million, 1.9 million, I think we're in a good spot. FSD full version release. And I mean FSD like the 11.4 version being fully released. That'll be a boom. Having access to the FSD 12 beta for beta users, the AI beta, that'll be crazy. Like, I don't even know what... I think the stock would go... For a brief moment in time, I think it would go crazy. Just because AI, consumer-facing AI products is what... is essentially what ChatGPT is, right? That's why ChatGPT launched Microsoft into the stratosphere. Why NVIDIA is doing so great, because that consumer-facing AI application, that's what the stock market wants. We can have, NVIDIA's doing great. NVIDIA's but that's like a business to business type of thing, right? They're just supplying like the chips to make AI possible. But when it comes to monetizing AI, if you can see strides in that from some type of company, and I think when it comes to monetizing AI from a consumer standpoint, Tesla's in the forefront of that. I will admit that. No one's raving about how great Microsoft and OpenAI is doing with like charging people for ChatGPT or Microsoft Copilot. No one cares about that right now. But if you can get people paying $12,000 for FSD beta because the AI beta is available for testing, that's going to be crazy. Another thing about FSD is FSD being available internationally. I know there was some text that was removed from the American version of FSD. So that auto steering on city streets, that was always like an upcoming feature thing. That was removed from upcoming features and moved over to just like regular features. So if you look at the configurator for Tesla USA site, when you're looking at FSD, you're looking at auto steer city streets being on just a regular features list. So it's very possible that when it comes to, and I think Farzad talked about, Matt Smith talked about this on Twitter, that having FSD, the auto steer part being part of regular features, being on the full kind of like features list, it's possible that the revenue that FSD has taken in can be fully reported in Q3 for earnings this quarter, because not all of FSD's earnings are reported in full because it wasn't complete when it came to its features list. FSD revenue on Q3 is basically what I mean by that. Have some negative catalysts. You can actually twist the PMI, ISM, CPI, and Twitter profitability and just look at it from the opposite side, where it's like, okay, if those things come in bad, obviously not great for the stock. But the other thing I want to talk about is the CEO. So we have Linda Yaccarino doing her thing, but she's going to be, if she's hamstrung in the ability to interact with companies and get them advertising on Twitter, because the ADL and other so-called like hate speech groups, like I think CCDH, which is like the Center for like digital hate. If these groups continue to wage war on Twitter or X and keep advertisers from advertising just because they want to avoid any really negative publicity, I don't see how Linda Yaccarino does her job. If we lose Linda as the CEO of Twitter, you will see that reflect pretty badly on Tesla stock. I just want you guys to be aware of that. And also, I want you guys to be aware of how we transition to the Model 3. So yeah, I said that Model 3 Highland being released in the United States could be a really big deal, or even just having information on when it's going to be able to be purchased and delivered. That's going to be really great for the stock. But it begs the question, what happens to all the Model 3s that are in inventory? Does the market accept another discount, a severe discount on Model 3s that are older in inventory without the stock selling off because they're saying, okay, this is just necessary to get this old product out and we can get the new ones in? There could be more price cuts is what I'm saying. And just kind of brace yourself for the fact that in that transition, price cuts will be a part of that conversation. The next thing is yields, oil, and DXY, basically the dollar index. We talked about the yields. We talked about the dollar. Yields are going up. And they went up a lot today, like 2% today on on some bonds. The dollar has been going up for 8 weeks, like I mentioned from that article. And oil has been going up for many, many weeks as well. So as all these things go up together, it kind of brings you back into 2022, where yields are a headwind, where the dollar is a headwind, and oil is inflation tailwind. And so are we getting back into that cycle where, we thought we beat inflation, but we're actually getting back into it, kind of whipsaw that we've seen in other type of inflation cycles in the past, where, you think that the rate hikes did their job, but the reality is it never fixed the underlying problems. We're not fixing the problems, and we're not creating more oil, or in turn, in this situation, oil is going up because, production cuts are being extended. Saudi Arabia and Russia are extending their production cuts, meaning that there's going to be less oil in the market. We're in America, due to permitting or just to return money to investors, our oil companies are not producing more oil. I think it's mostly because the administration doesn't want them to do it, but that's still a fact that we're not producing oil. We're not getting more, and we're not putting up more rigs. We're not getting more permits for new drilling sites and stuff like that. So that could be a near-term negative catalyst if those things keep going up. But ironically, at the same time, if oil costs go up and that means gasoline prices go up, does Tesla's look more lucrative? It depends, because you're still fighting against the yields, right? If yields are still going up, that's still problematic. On production delivery numbers, in this transition, even though that Elon said in the last earnings call that production will come in a little bit due to the updating of the Model Y lines and the transition to a new model for the Model 3. Well, he didn't say that specifically for the Model 3, but we all kind of figured that's what he meant. Does that affect production numbers? Does that affect delivery numbers? But you can kind of see it in a different way, where production comes down, but they were able to ramp up production in anticipation of this. That's why we have all this stock in America, not overseas. Actually, overseas, you're seeing some extended delivery times on certain vehicles. But so maybe we have lower production, but inline delivery numbers. That's a very good possibility. So margins as well. Hopefully we see expansion and not a contraction of that. So we looked at Tesla's chart. I just think that this is simply just getting Tesla back into line so it can get ready for the move tomorrow. Because there was that overreaction, perhaps an overreaction from what happened on Friday of last week in response to SNX price cuts. And what I mean by getting ready for tomorrow, if you look at the mega cap names, so here's Microsoft, Nvidia, Tesla over Apple. I'll turn off these EMAs. You're essentially seeing them now back kind of in line. And it's going to get ready for the move that's going to happen tomorrow based off ISM and PMI numbers. If they drop, they'll all drop together. And so we're just kind of waiting now. We saw some outperformance in the NASDAQ over the S&P 500, where that kind of goes along with what we thought, or what even the market even knows, that there was a lot of inflows into tech stocks over the last couple of weeks. And people are seeing tech kind of like how they saw tech in March, where it's a safe haven. It's going to be the strongest sector other than maybe energy in the short term. Because let's say next Wednesday, inflation is lower, right? That's great. And stocks will eventually go up. right? Because inflation is lower, meaning that they won't have to do rate hikes, and maybe we'll just do rate cuts. But the rate cuts, that's the question mark. We don't know when that's going to happen, but we do know that tech stocks could maybe outperform in that scenario where inflation is good. Maybe tomorrow ISM numbers are good and PMI numbers are good. That whole ISM is good in the sense that it's not expanding too quickly. But because these companies have so much money, cash, they can survive until the cut happens. Whereas other companies who don't have the cash, even though rates might peak, it still becomes a question, can they keep surviving in the high rate environment until the cuts happen? But we know from looking at the Fed funds futures is that, okay, let's say the cuts do happen, but you might not see a significant difference in the interest rate from when the cuts start until when, they get to an acceptable point for maybe 8 months, a year. Can you survive the cutting as well? So you have to survive the high rate environment. But when the cuts start, it doesn't mean they're cutting by 1%. Maybe they'll cut by 0.2%, 2.5%. And that's going to be slow too. So tech stocks in America are still seen as a safe haven, apparently, where they're getting all the inflows. Okay, you're looking at the other markets around the world, not so great. So if you can get your money out of those continents or out of those international markets, let's say you find yourself with your money in the U.S. stock market, do you want to be in Apple, or do you want to be in like Target? I mean, it's obviously Apple, and that's even an obvious answer when Apple's earnings have been coming in quarter over quarter over quarter, like 3 quarters in a row, where there's all these negative headlines coming out of Asia, like, from this Chinese article saying that, Apple's cutting back orders for their 3nm chips from TSM. And Apple took quite a hit for that, but you saw Apple recover. So I think the market is trying to say to themselves, like, we just want to get to the point where like we can get the stocks in a position where they're not too cheap going into an economic reading. And you see that sometimes. I think the market doesn't want it to be too cheap and too easy to make a call that you want to go short or go long on a stock. They want to put you in a position where the choice is really hard. And you see that come in a lot, that kind of scenario come up a lot in inflation, the day before inflation or what have you. So simply, it's just making the stocks a little bit more expensive so you can't just be an easy short or easy call going into ISM tomorrow. But with the recovery, we're basically back in line for these stocks. So looking at Tesla, you're slightly above Apple. So you're what, 0.3, you're 3% above Apple. That kind of makes sense. Let's say you're working with a 1.8 to 2 beta. Yeah, that makes sense that you'd be outperforming Apple a little bit. And looking at NVIDIA took a little bit of a hit. There's a lot of talk of NVIDIA being a Ponzi scheme. That's not our position. This is not the channel for that. But NVIDIA gets kind of suppressed with what people are perceiving as their accounting is a little bit sketchy. Whatever, doesn't matter. But anyways, the mega caps are kind of moving in line and back into their different ratios of performance or outperformance. So I think that's all that is. I think that's all today's move was. It's just moving Tesla back to where it's kind of supposed to be and getting it ready to drop or to pump tomorrow. And let's look at, we talked about yields a little bit, and we'll look at the yields. So we're looking at the 10-year. We drew this kind of head and shoulders pattern before. And it's kind of following kind of what we thought it would do. So if yields are going up, we would have figured that the market would go down. S&P 500 did in fact do that. Let's see. Let me draw this in because for some reason TradingView didn't have the price action for the yields today. Something broke on their end. But you can see from the dotted line, this is where the yields ended up, 4.27% essentially. And we're getting into that head and shoulders pattern now. And that's kind of what I wanted to see. I want to see that play out and then get sold off as the week goes on. That's the only bullish hope I got. That we're here. Okay, we've kind of formed the left shoulder, we've formed the head, and now we're forming the right shoulder, and we can come down and hit the trend line. I would love to see 4.09% by the end of the week, which would be actually right here, not here. But if we can get to the trend line by the end of the week, that'd be great. The reason we kind of drew this head and shoulders is because the neckline was actually angled as well. So it's kind of parallel with the upwards trend. for the yield. So yeah, if we can kind of see that come back in based off some good numbers for the market tomorrow, this would be exactly how we thought yields would play out. And we also thought that even from the long bonds, like TLT sold off for the past 2 or 3 days. And I think we kind of called that. We knew that it would kind of form some type of bottoming pattern on a shorter term time frame. This gap up might get resolved tomorrow morning. Even that's like, it might be something that you see where it's like tomorrow morning, depending on how data, let's say data is received really badly at first just to scare you out of the market. But so it gaps down right here, but actually shoots back up within 1 to 2 days. Possibility. Fill the gap over at 93.2, and then start moving back up. You form this perfect inverse head and shoulders. You mitigate this kind of imbalance on this gap right here. And in the longer term, when it comes to the long bond, you make a very convincing double bottom. A double bottom that we've been really watching for a really long time. This is a double bottom we've been waiting for 9, 10 months from October. Okay, so this would be almost a year-long double bottom process. And from looking back on this chart, months or years from now, this would have been what people have said. If this is actually our bottom, this is like a generational bottom for bonds that a lot of people miss out on. I'm not saying to do anything with bonds, not financial advice at all. Let's look at the VIX. So the VIX gapped up, and so it kind of sets up for a move to the downside again. That if we go back down, fill this gap, that means the market will go back up. Equities go back up, and maybe they'll fuel kind of a short-term rally into CPI, depending on numbers tomorrow. So there's kind of a setup here from the yields being really high, maybe too high, maybe being quote unquote a little bit on the overbought level when it comes to TLT, which represents long bonds. Maybe this is just a little bit too oversold. We're really back into that area where we're what from the RSI aspect in the low 20s, where it's found itself as at a bottom. Like you see in the low 20s, it looks like on a short-term bottom has formed. MACD, that doesn't necessarily say in the picture. Stochastic kind of says we're a little bit oversold, and so that could be a good setup going into tomorrow. Looking at how Tesla compares to the rest of its sector, you can see Tesla outperforming for the day. So even though we know that BYD reported numbers along with the rest of the Tesla auto manufacturers, BYD's sales are up big. I'm not sure what their EV sales are up because, I think we all know that BYD also manufactures hybrid vehicles with internal combustion engines, but their sales are up. So a lot of the Chinese manufacturers had a decent month, but it looks like still that for today's trading, Tesla very much outperformed BYD, outperformed the rest of the sector. Even looking at Rivian here in the yellow, outperformed Rivian very much so. Lucid and everything like that. No one's as close to Tesla. But if you look at from a 2-day perspective, Tesla's still outperforming. So that's good. And this could be a recognition for the fact when it comes to even Rivian, even though I said before, like when Rivian performs, it might perform better than Tesla just because it's a little bit more volatile stock. But with this Hypertruck out, with the Model X being discounted, it makes it more difficult for Rivian, who's making SUVs, who's making pickup truck EVs. It might make it a little bit more difficult for it to capture more sales. And that's great for Tesla shareholders. And that might be unfortunate for Rivian, who we know is not as profitable or profitable at all compared to the likes of Tesla. And Tesla's willing to sacrifice some margin on the Model X. And if that eats into Rivian sales, it's going to eat into someone's EV sales. And it most likely will be Rivian. The Cybertruck, most likely Rivian, most likely Ford. I don't think GM's pickup truck is going to be a contender there. And so you might see an interesting trade come up where it's long Tesla, short Rivian. Where Rivian, just because it's going up against competition directly with Tesla now, it could be really problematic for that stock. And they are fragile. They are down a lot since their IPO. So they got beaten up a lot, but it doesn't mean they can't get beat up even more. But it's something to really think about. Before I close out the video, I just want to show you something that is a bit scary when you look at it from a longer term perspective. Here's the S&P 500. And let's look at it from like the hourly. it looks really bad. It looks really, really bad, but it is really oversold, but not as oversold as where it has bottomed in the past. So I just want you guys to kind of watch this. I know if you watch Tesla a lot, you might be watching the rest of the market. Just know that Tesla really outperformed the S&P 500 today, outperformed everyone today. But the S&P 500 is looking just not great. And everyone is looking at this price here at 454, 453 on the S&P. I'm on the SPY, being kind of this like UTAD, this upward thrust after distribution, and this is kind of the wick-off distribution pattern. I'm not saying that's what it is, and I don't necessarily believe when it comes to the whole wick-off thing, but it does play out a lot. You might even see it better. You might see it better in the US 500. And looking at the S&P X here, this is what you're looking at. If you saw this pattern in Tesla, I don't think anyone's calling this a bull flag, right? No one's calling this a bull flag. People are looking at this as a topping pattern where you're now making lower lows, you're making lower highs, and you had kind of this thrust that was sold off very quickly in the middle of this pattern. So something I want you guys to keep in mind, that let's not lose focus all the time when it comes to, like, we like to focus on Tesla. I focus on Tesla. I look at that ticker basically the most, other than S&P 500, but the S&P 500 can affect Tesla as well. Even though Tesla outperformed, the S&P 500 can drag down Tesla. It takes a little bit of negative sentiment from the rest of the market, and it can drag it down. So just kind of be aware of this, that if our numbers are looking bad tomorrow, just get ready to be really quick tomorrow. Like if you when at 9:45 a.m. Eastern time, you see some negative movement that doesn't stop all day long, just know that we talked about this today, that if the ISM is just too hot, it's going to be really bad for stocks. So thanks so much for listening, guys. Let's hope and pray that tomorrow is going to be great. And if not, we have 15 minutes to prepare for it before the economic data drops happen at 9:45 and 10 a.m. tomorrow. All right. Good night. Bye.